Question 1. Normal practice question. Topic: Factors affecting premiums. Which of the following factors would not directly influence the premium rates for a term life insurance policy in Wyoming? A. Age of the insured. B. Gender of the insured. C. Type of beneficiary selected. D. Smoking status of the insured. Answer: C. Type of beneficiary selected. Explanation: the premium for a term life insurance policy is calculated based on various factors such as the insured's age, gender, smoking status, and health condition. These factors help insurers estimate the risk of insuring a person. Age option A, gender option B, and smoking status option D are key considerations because they statistically impact life expectancy. However, the type of beneficiary selected, option C, does not affect the insured's risk of death and thus does not influence the premium rates. Underwriting focuses on the risk posed by the insured, not the details regarding beneficiaries. Question 2. Normal practice question. Topic: Contestability period and claim investigations. If a life insurance policyholder in Wyoming passes away 18 months after purchasing a term life policy and the insurer discovers a misstatement on the application, what can the insurer legally do under the contestability clause? A. Deny the claim outright. B. Adjust the claim payout based on the accurate information. C. Deny the claim if the misstatement was intentional. D. Both B and C are correct. Answer: D. Both B and C are correct. Explanation: the contestability period in Wyoming, typically a 2-year period, allows insurers to review and investigate claims for material misstatements or fraud on the application. If the misstatement is discovered within this period, the insurer has the right to deny the claim if the misstatement was intentional and affected the underwriting decision. Option C. Alternatively, if the misstatement was unintentional but would have led to different policy terms, such as a higher premium, the insurer can adjust the payout based on what the premiums would have been with accurate information. Option B. Both options are legally available during the contestability period, making option D the correct answer. Question 3. Scenario-based question. Topic: Conversion to permanent life insurance. Michael, a 45-year-old Wyoming resident, purchased a 20-year term life insurance policy when he was 40. At age 48, Michael decides he wants more permanent coverage as he approaches retirement and considers converting his term policy into a whole life policy. What must Michael ensure in order to successfully convert his policy without needing a new medical exam? A. He must convert the policy before the term period ends and within the conversion window stipulated in the contract. B. He must prove continued insurability by undergoing a new medical exam. C. He must pay a one-time conversion fee to the insurer. D. He must wait until the term policy has expired before converting. Answer: A. He must convert the policy before the term period ends and within the conversion window stipulated in the contract. Explanation: term life insurance policies often include a conversion option, which allows the policyholder to convert the term policy into a permanent life insurance policy, such as whole life, without requiring proof of insurability or a new medical exam. Option B is incorrect. However, the conversion must be done during a specified window, often before the term period expires and within a time frame defined by the insurer. Option A is correct. There is no universal requirement for a one-time conversion fee. Option C is incorrect, and Michael should not wait until the term policy expires, as doing so could result in the loss of his ability to convert. Option D is incorrect. Question 4. Normal practice question. Topic: Reinstatement. A Wyoming policyholder's term life insurance policy lapsed due to non-payment of premiums. Which of the following is a typical condition for reinstating the policy? A. The policyholder must provide evidence of insurability. B. The policyholder must accept a reduced death benefit. C. The insurer must waive the missed premium payments. D. The policyholder must pay interest on the missed premiums only after the reinstatement period ends. Answer: A. The policyholder must provide evidence of insurability. Explanation: to reinstate a lapsed life insurance policy, the policyholder must typically provide evidence of insurability. Option A, to prove they are still a suitable risk. The policyholder is also required to pay all overdue premiums, often with interest, at the time of reinstatement, not after the reinstatement period ends. Option D is incorrect. Insurers do not waive missed premium payments. Option C is incorrect, and the death benefit usually remains the same, not reduced. Option B is incorrect. These provisions help protect insurers from increased risk after a policy lapses. Question 5. Normal practice question. Topic: Suicide clause. Under Wyoming law, how does the suicide clause typically affect a term life insurance policy during the first 2 years? A. The policy pays the full death benefit regardless of the cause of death. B. The policy will not pay any death benefit if suicide occurs within the first 2 years. C. The policy will refund premiums paid if suicide occurs within the first 2 years. D. The policy terminates immediately upon any suspicion of suicide. Answer: C. The policy will refund premiums paid if suicide occurs within the first 2 years. Explanation: most term life insurance policies contain a suicide clause that stipulates that if the insured commits suicide within the first 2 years of the policy, the insurer will not pay the full death benefit. Instead, they will refund any premiums paid. Option C. After the 2-year period, the full death benefit is payable even in cases of suicide. Option B is incorrect because premiums are refunded rather than no payout at all. Option is incorrect because the full death benefit is not paid within the first 2 years in case of suicide, and option D is incorrect because the policy does not terminate immediately on suspicion of suicide. Question 6. Scenario-based question. Topic: beneficiary designation. Lisa is a Wyoming resident who has designated her spouse as the primary beneficiary and her 2 children as contingent beneficiaries of her term life insurance policy. Unfortunately, her spouse passes away before her, and Lisa never updates her policy. If Lisa dies, who will receive the death benefit under the policy? A. The death benefit will be paid to Lisa's estate. B. The death benefit will be split equally between the contingent beneficiaries, her children. C. The insurer will keep the death benefit since no primary beneficiary is alive. D. The death benefit will be forfeited. Answer: B. The death benefit will be split equally between the contingent beneficiaries, her children. Explanation: when a policyholder designates a primary and contingent beneficiary, the death benefit is first paid to the primary beneficiary if they are alive. However, if the primary beneficiary predeceases the policyholder, the contingent beneficiaries, in this case Lisa's children, receive the death benefit in equal shares, unless otherwise specified. Option B is correct. The benefit does not go to the estate unless no contingent beneficiaries are listed. Option is incorrect. The insurer does not keep the benefit. Option C. And the death benefit is not forfeited. Option D. Question 7. Normal practice question. Topic: underwriting considerations. When underwriting a term life insurance policy in Wyoming, which of the following is least likely to affect the underwriting decision? A. The applicant's age. B. The applicant's occupation. C. The applicant's marital status. D. The applicant's medical history. Answer: C. The applicant's marital status. Explanation: in life insurance underwriting, the most important factors are those that affect the insured's life expectancy or risk of death. These include age, option A; occupation, option B, particularly if the applicant works in a hazardous job; and medical history, option D. Marital status, option C, does not significantly impact the risk of death or life expectancy, making it the least relevant factor in the underwriting decision. Question 8. Normal practice question. Topic: policy loan provisions. In Wyoming, which of the following statements is true regarding policy loans on a term life insurance policy? A. Policy loans are allowed, but they reduce the death benefit if unpaid. B. Policy loans are allowed only if the policyholder has a high credit score. C. Term life insurance policies do not typically offer policy loans. D. Policy loans are granted but must be repaid within the policy's first year. Answer: C. Term life insurance policies do not typically offer policy loans. Explanation: unlike permanent life insurance policies that build cash value, term life insurance does not accumulate cash value and therefore does not offer policy loans. Option C is correct. Policy loans are common in whole life or universal life insurance policies where cash value is built up over time. Term life insurance solely provides a death benefit with no savings or loan component, making the other options incorrect. Question 9. Scenario-based question. Topic: group conversion privileges. Greg, a 35-year-old employee in Wyoming, is covered under his employer's group term life insurance policy. He leaves his job after 10 years of employment. Which of the following options is available to Greg under typical Wyoming group life insurance conversion rules? Greg can convert his group coverage to an individual permanent policy without providing proof of insurability. B. Greg must take a medical exam to convert his group coverage to an individual term life policy. C. Greg can continue his group coverage indefinitely as long as he continues to pay premiums. D. Greg cannot convert his group coverage to any individual policy. Answer A. Greg can convert his group coverage to an individual permanent policy without providing proof of insurability. Explanation: Under Wyoming group life insurance conversion privileges, employees typically have the right to convert their group coverage to an individual permanent life insurance policy without needing to provide proof of insurability. Option A. This is beneficial for individuals who may have developed health conditions since the time they first joined the group plan. Greg does not need a medical exam to convert. Option B is incorrect, and group coverage cannot be continued indefinitely after leaving employment. Option C is incorrect. Group life insurance policies can be converted to individual policies, so option D is also incorrect. Question 10. Normal practice question. Topic: Waiver of premium rider. What happens under a waiver of premium rider if the policyholder becomes totally disabled? A. The insurer continues the policy without requiring any future premium payments. B. The policyholder is refunded all premiums paid before the disability occurred. C. The death benefit is increased to compensate for lost income. D. The policyholder must pay the premiums until the end of the policy term. Answer A. The insurer continues the policy without requiring any future premium payments. Explanation: a waiver of premium rider allows the insured to stop making premium payments if they become totally disabled, while the insurer keeps the policy in force. Option A. The policyholder does not receive a refund of previous premiums. Option B. And the death benefit is not increased to option C. The policyholder does not need to continue paying premiums while disabled. Option D, as the purpose of this rider is to alleviate the financial burden during periods of disability. Question 11. Normal practice question. Topic: Insurable interest. In Wyoming, which of the following best describes the concept of insurable interest? A life insurance contract. A. The policyholder must prove they stand to gain financially from the insured's death. B. The policyholder must have a personal, family, or financial relationship with the insured. C. The insured must have a medical condition to justify the purchase of life insurance. D. The policyholder can take out a policy on anyone they know socially. Answer B. The policyholder must have a personal, family, or financial relationship with the insured. Explanation: Insurable interest means that the policyholder has a legitimate interest in the life of the insured, typically due to a personal or financial relationship. Option B. This requirement prevents people from taking out life insurance policies on strangers or individuals with whom they have no meaningful connection. The policyholder does not need to prove they stand to gain financially from the insured's death. Option is incorrect, and the insured's health condition does not determine insurable interest. Option C. Option D is incorrect because social acquaintance alone does not establish insurable interest. Question 12. Scenario-based question. Topic: Underwriting and application process. James applies for a term life insurance policy in Wyoming. During the underwriting process, it is discovered that James did not disclose a prior medical condition on his application. Which of the following is the most likely action the insurer will take? A. The insurer will issue the policy but increase James' premiums. B. The insurer will decline to issue the policy altogether. C. The insurer will issue the policy but exclude coverage for the undisclosed condition. D. The insurer will require James to reapply after a 2-year waiting period. Answer B. The insurer will decline to issue the policy altogether. Explanation: if an applicant fails to disclose material information such as a medical condition during the underwriting process, the insurer may choose to decline the application. Option B. This is because the undisclosed condition affects the insurer's ability to assess risk accurately. Increasing premiums. Option A. Or excluding coverage for specific conditions. Option C. And not standard practices for non-disclosure. Option D is incorrect because the insurer does not typically require reapplication after a waiting period of the decision is based on the initial application. Question 13. Normal practice question. Topic: Policy loan provisions. Under Wyoming law, what happens if a policyholder with a whole life insurance policy takes out a loan against the policy's cash value and then dies before repaying the loan? A. The loan is forgiven and the full death benefit is paid to the beneficiaries. B. The outstanding loan amount and any accrued interest are deducted from the death benefit. C. The beneficiaries must repay the loan before receiving the death benefit. D. The death benefit is paid in full and the loan is repaid from the policyholder's estate. Answer B. The outstanding loan amount and any accrued interest are deducted from the death benefit. Explanation: if a policyholder takes out a loan against their whole life insurance policy's cash value and they pass away before repaying it, the insurer will deduct the loan amount plus accrued interest from the death benefit. Option B. This ensures the insurer is reimbursed The loan is not forgiven. Option A. The beneficiaries do not have to repay the loan. Option C. And the repayment does not come from the estate. Option D. Question 14. Normal practice question. Topic: Return of premium term. A return of premium ROP term life insurance policy in Wyoming has the unique feature of A. Returning the premiums paid if the insured survives the policy term. B. Increasing the death benefit each year the insured survives. C. Guaranteeing policy renewal at the same premium. D. Providing coverage for dependents at no additional cost. Answer A. Returning the premiums paid if the insured survives the policy term. Explanation: An ROP term life insurance policy returns the total premiums paid if the insured outlives the policy term. Option A. This is an attractive feature for policyholders who view the policy as a potential investment. Options B, C, and D are incorrect because the policy does not increase the death benefit. B. Guarantee renewal at the same premium. C. Or provide free dependent coverage. D. Question 15. Scenario-based question. Topic: Misstatement of age or gender. Karen purchased a term life insurance policy in Wyoming and accidentally misstated her age on the application, making herself appear younger than she actually is. If this mistake is discovered after her death, what will the insurer most likely do? A. Pay the full death benefit as stated in the policy. B. Adjust the death benefit to reflect what the premiums would have purchased at her correct age. C. Void the policy and return the premiums paid. D. Refuse to pay the death benefit and cancel the policy. Answer B. Adjust the death benefit to reflect what the premiums would have purchased at her correct age. Explanation: If a policyholder's age is misstated on an application, insurers will typically adjust the death benefit to what the premiums would have purchased based on the correct age. Option B. This adjustment is a standard provision in most life insurance policies to ensure fairness. The insurer does not void the policy. Option C. Or refuse to pay the benefit entirely. Option D. Paying the full death benefit as originally stated. Option A is also incorrect because the insurer must correct the benefit to reflect accurate risk. Question 16. Normal practice question. Topic: Incontestability clause. Which of the following best describes the incontestability clause in Wyoming life insurance policies? A. The insurer can contest the policy indefinitely if there is fraud. B. The insurer cannot challenge the validity of the policy after it has been in force for 2 years except in cases of fraud. C. The policy is contestable for up to 1 year, regardless of fraud or misrepresentation. D. The incontestability clause applies only to group life insurance policies. Answer B. The insurer cannot challenge the validity of the policy after it has been in force for 2 years except in cases of fraud. Explanation: The incontestability clause is a common provision in life insurance policies, which states that after the policy has been in force for 2 years, the insurer cannot contest or void the policy except in cases of fraud. Option B. This clause provides protection to policyholders from having their claims denied for errors or misrepresentations after the contestability period has passed. Option is incorrect because insurers are limited in contesting the policy after 2 years. Option C is incorrect because the period is generally 2 years, not 1. Option D is incorrect because the clause applies to both individual and group policies. Question 17. Normal practice question. Topic: Grace period in Wyoming. What typically happens if a policyholder fails to pay their life insurance premium by the due date, but within the grace period? A. The policy lapses immediately and coverage is lost. B. The policy remains in force, but the death benefit is reduced. C. The policy remains in force and the missed premium is deducted from the death benefit if unpaid. D. The insurer cancels the policy but allows for reinstatement with a fee. Answer C. The policy remains in force and the missed premium is deducted from the death benefit if unpaid. Explanation: During the grace period, the life insurance policy remains in force even if the premium is not paid by the due date. If the policyholder dies during this period, the insurer may deduct the unpaid premium from the death benefit. Option C. The policy does not lapse immediately. Option A. The death benefit is not reduced. Option B. And the policy is not cancelled. Option D. As long as the premium is paid within the grace period. Question 18. Scenario-based question. Topic: Policy replacement rules in Wyoming. Mark, a life insurance producer in Wyoming, is helping a client, Sarah, replace her existing term life insurance policy with a new one. What must Mark do according to Wyoming replacement regulations? A. Mark must notify the existing insurer of the replacement. B. Mark must obtain a signed statement from Sarah acknowledging the replacement. C. Mark is required to submit proof of insurability for Sarah to both insurers. D. Mark must provide a side-by-side comparison of both policies to Sarah. Answer: B. Mark must obtain a signed statement from Sarah acknowledging the replacement. Explanation: Wyoming's policy replacement regulations require the producer to obtain a signed statement from the policyholder, Sarah, acknowledging the replacement. Option B. This ensures the client is fully aware of the decision to replace their policy. Mark is not required to notify the existing insurer. Option A. Nor must he submit proof of insurability to both insurers. Option C. While providing a comparison. Option D is a good practice. It is not a mandatory legal requirement under Wyoming law. Question 19. Normal practice question. Topic: contestability period and claim investigations. If a policyholder dies within the 2-year contestability period in Wyoming, what action is the insurer likely to take? A. Automatically pay the death benefit without investigating. B. Investigate the claim to ensure no misrepresentation occurred on the application. C. Refuse to pay the death benefit until the contestability period expires. D. Reduce the death benefit by half. Answer: B. Investigate the claim to ensure no misrepresentation occurred on the application. Explanation: if a policyholder dies within the contestability period, usually 2 years after the policy is issued, the insurer has the right to investigate the claim to ensure that no material misrepresentation or fraud occurred on the application. Option B. This investigation allows the insurer to verify the accuracy of the information provided by the policyholder at the time of application. If any significant discrepancies or falsehoods are found, the insurer may adjust the death benefit or even deny the claim. The insurer does not automatically pay the benefit without investigation. Option A. And they do not refuse to pay until the contestability period ends. Option C. Reducing the death benefit by half. Option D is not a standard practice related to the contestability period. Question 20. Normal practice question. Topic: free look period. In Wyoming, what is the standard length of the free look period for life insurance policies during which a policyholder can cancel their policy and receive a full refund? A. 7 days. B. 10 days. C. 30 days. D. 45 days. Answer: B. 10 days. Explanation: in Wyoming, the free look period typically lasts 10 days. Option B. During this time, the policyholder can review the policy terms, and if they decide the policy does not meet their needs, they can cancel it and receive a full refund of premiums paid. The free look period provides policyholders an opportunity to change their minds without financial penalty. Option was 11 days, option C 30 days, and option D 45 days, although incorrect, as the standard period in most states, including Wyoming, is 10 days. Question 21. Normal practice question. Topic: beneficiary designation. In Wyoming, which of the following statements is true regarding changing the beneficiary of a life insurance policy? A policyholder can change the beneficiary at any time without notifying the existing beneficiary. B. A policyholder can only change the beneficiary with the consent of the current beneficiary. C. Once a beneficiary is named, it cannot be changed unless the policyholder dies. D. Beneficiary changes are only allowed within the first year of the policy. Answer A. A policyholder can change the beneficiary at any time without notifying the existing beneficiary. Explanation: a policyholder in Wyoming can typically change the beneficiary of their life insurance policy at any time without needing to notify the current beneficiary. Option A. This gives the policyholder flexibility in managing their policy. Option B is incorrect because the policyholder generally does not need the current beneficiary's consent unless the beneficiary is irrevocable. Option C is incorrect because the beneficiary can be changed while the policyholder is alive, and option D is incorrect because there is no such time limit on changing beneficiaries. Question 22. Scenario-based question. Topic: misrepresentation and policy rescission. George purchases a life insurance policy in Wyoming and fails to disclose that he is a smoker, claiming to be a non-smoker on the application. 5 years later, George dies from a smoking-related illness. How will the insurer likely respond? A. Pay the full death benefit as George has passed the contestability period. B. Reduce the death benefit to account for the difference in premiums between smoker and non-smoker rates. C. Refuse to pay the death benefit and void the policy due to the misrepresentation. D. Pay half the death benefit to account for the misrepresentation. Answer: B. Reduce the death benefit to account for the difference in premiums between smoker and non-smoker rates. Explanation: since George passed away after the 2-year contestability period, the insurer cannot void the policy or refuse to pay the death benefit. Option C is incorrect. However, the insurer may adjust the death benefit to reflect what George would have been eligible for if he had accurately disclosed his smoking status, which would have resulted in higher premiums. Option B: the insurer does not pay half the benefit. Option D: an option is incorrect because the death benefit may still be adjusted despite the contestability period having ended. Question 23. Normal practice question. Topic: premium payment modes. Which of the following is an advantage of paying life insurance premiums annually instead of monthly in Wyoming? A. Lower overall premium costs. B. Increased cash value accumulation. C. Guaranteed policy renewal. D. Larger death benefit. Answer: A. Lower overall premium costs. Explanation: paying life insurance premiums annually is generally less expensive overall than paying monthly. Option A: because insurers typically charge additional fees for monthly, quarterly, or semi-annual payments to cover administrative costs. This can result in higher total premium payments over the year. Options B, C, and D are incorrect because the payment frequency does not directly affect cash value accumulation, policy renewal, or the size of the death benefit. Question 24. Normal practice question. Topic: settlement options in Wyoming. Which of the following is a settlement option for life insurance proceeds? A. Payment of the death benefit in a lump sum. B. Automatic conversion of the death benefit into an annuity. C. Reinvestment of the death benefit into a new policy. D. Payment of the death benefit to the insurer's general account. Answer: A. Payment of the death benefit in a lump sum. Explanation: a common settlement option in Wyoming is to pay the death benefit in a lump sum. Option A. Other settlement options may include payments over time, such as through installments or an annuity, but the automatic conversion of the benefit into an annuity, option B, or reinvestment into a new policy, option C, is not typical. Option D is incorrect because the death benefit is paid to the beneficiaries, not the insurer's general account. Question 25. Scenario-based question. Topic: policy lapse and reinstatement. John's life insurance policy in Wyoming lapses due to non-payment of premiums. 6 months later, John wants to reinstate the policy. What must John do to successfully reinstate it? A. Provide evidence of insurability and pay all past due premiums with interest. B. Pay only the premiums missed during the lapse period. C. Submit a new application and go through the full underwriting process again. D. Pay a reinstatement fee, but no premiums. Answer: A. Provide evidence of insurability and pay all past due premiums with interest. Explanation: to reinstate a lapsed life insurance policy in Wyoming, John would typically need to provide evidence of insurability, which may involve undergoing a medical exam, and pay all past due premiums along with any accrued interest. Option A. This process ensures the policyholder is still insurable and catches up on unpaid amounts. Option B is incorrect because he must also pay interest. Option C is incorrect because reinstatement does not require a full new application, and option D is incorrect because paying only a reinstatement fee without paying past due premiums is not sufficient. Question 26. Normal practice question. Topic: suicide clause. If a policyholder in Wyoming commits suicide within the first 2 years of the policy, what is the insurer's obligation under the suicide clause? A. Pay the full death benefit. B. Pay the premiums back but not the death benefit. C. Deny the claim without refunding any premiums. D. Pay a reduced death benefit based on the suicide exclusion. Answer: B. Pay the premiums back but not the death benefit. Explanation: in Wyoming, most life insurance policies contain a suicide clause that states if the insured commits suicide within the first 2 years of the policy's inception, the insurer will not pay the death benefit. Instead, the insurer will return the premiums paid. Option B. This provision protects insurers from immediate claims for suicide. Option is incorrect because the death benefit is not payable in this situation. Option C is also incorrect, as insurers must refund the premiums. Option D does not apply, as there is no reduced death benefit, just a refund of premiums. Question 27. Normal practice question. Topic: misstatement of age or gender. If an insured in Wyoming misstates their age on the life insurance application, what will the insurer likely do when the error is discovered upon the insured's death? A. Deny the claim due to the misstatement. B. Adjust the death benefit to reflect the correct age. C. Pay the full death benefit as stated in the policy. D. Refund the premiums and cancel the policy. Answer B. Adjust the death benefit to reflect the correct age. Explanation: when an insured misstates their age on a life insurance application, the insurer will not typically deny the claim. Instead, they will adjust the death benefit to reflect what it would have been if the correct age had been provided. Option B. This is standard procedure and ensures fairness in both premium payments and benefits. Option is incorrect because misstatements of age are not typically grounds for claim denial. Option C is incorrect because the benefit would not be paid in full, and option D is not applicable as the policy is not cancelled due to an age misstatement. Question 28. Scenario-based question. Topic: beneficiary rights. Sarah, a life insurance policyholder in Wyoming, names her husband as the primary beneficiary and her children as contingent beneficiaries. Sarah later divorces her husband but forgets to change the beneficiary designation upon Sarah's death. Who is entitled to the death benefit? A. Her ex-husband will still receive the death benefit. B. The death benefit will automatically go to her children as contingent beneficiaries. C. The death benefit will go to her estate. D. The insurer will split the death benefit between her ex-husband and children. Answer A. Her ex-husband will still receive the death benefit. Explanation: in Wyoming, unless the policyholder explicitly changes the beneficiary after divorce, the ex-spouse will remain the beneficiary. Option A. Beneficiary designations are legal contracts and the insurer must follow the policyholder's most recent instructions. If Sarah did not update her beneficiary designation after her divorce, her ex-husband would still receive the death benefit. Option B is incorrect because the contingent beneficiaries only receive the benefit if the primary beneficiary is deceased or disqualified. Option C is incorrect because the estate is not involved unless no beneficiaries are named. Option D is also incorrect as the benefit is not typically split between primary and contingent beneficiaries. Question 29. Normal practice question. Topic: reinstatement period. In Wyoming, if a life insurance policy lapses due to non-payment, how long does the policyholder generally have to reinstate the policy? A. 6 months. B. 1 year. C. 3 years. D. 5 years. Answer C. 3 years. Explanation: in Wyoming, life insurance policies typically allow the policyholder up to 3 years. Option C, to reinstate a lapsed policy provided they meet the reinstatement requirements. These requirements often include paying all missed premiums with interest and providing evidence of insurability. Option equals 6 months and option B, 1 year, are shorter than the standard reinstatement period. Option D, 5 years, is incorrect as the standard reinstatement period is not that long. Question 30. Normal practice question. Topic: waiver of premium rider. What is the primary function of a waiver of premium rider in a life insurance policy? A. It allows the policyholder to stop paying premiums if they become disabled. B. It increases the death benefit if the insured dies in an accident. C. It guarantees policy renewal without providing evidence of insurability. D. It refunds all premiums paid if the insured lives past a certain age. Answer A. It allows the policyholder to stop paying premiums if they become disabled. Explanation: a waiver of premium rider allows the policyholder to stop paying premiums if they become totally disabled and meet certain conditions. Option A. This rider ensures that the life insurance policy remains in force even if the policyholder can no longer afford the premiums due to disability. Option B is incorrect because it describes an accidental death benefit rider. Option C refers to a renewal provision rather than a waiver of premium, and option D is incorrect as it describes a return of premium feature, not a waiver of premium.